key inflation index has just hit a record high.
The Fed raised interest rates again this week.
83% of Americans describe the current state of the economy as poor.
We are 13 days away from an absolute explosion on inflation.
Heated tensions with China.
Will the U.S. dollar collapse?
The third largest bank failure in U.S. history.
The abrupt closures of 3 banks in a matter of days, raising concerns about the U.S. banking system.
It is going to be very challenging.
ChatGPT.
We are developing technology which for sure one day will be far more capable than anything we've ever seen before.
The metaverse will be able to feel present, like we're right there with people, no matter how far apart we actually are.
The time to be putting capital to work is when there's blood rushing through the streets, and that's happening in crypto right now.
All right, good morning, everyone. Thank you so much for coming. It's amazing to have a full room here composed of everything from our LPs that make everything possible to our founders that we work with every single day, to friends and family, and of course also our industry partners that we get to work alongside with in pushing a lot of these technologies that will redefine the future. First of all, I'm so grateful that you all came to New York. This is our first annual summit. We first had our own event when we launched our Metaverse Fund. And so today will be the first time we're hosting our annual conference where we're putting together our best founders, our best industry partners to really highlight where the technologies of the future are going. And so, as we hinted at in the video, the world is living in a challenging place. Whether it is record high inflation numbers, whether it is a banking crisis, where we get not 2 or 3, but 4 of the biggest banking failures in US history happen within 55 days. We also are seeing more and more layoffs across the board. We're also seeing geopolitical conflicts, Russia, Ukraine, US, China. In fact, it's now spreading where we're also noticing this geopolitical war become a currency war, where the BRICS nations are looking to go off the US dollar standard, and the world for once is becoming more and more fragmented. And as I have these conversations with potential limited partners and current limited partners, one of the most common concerns is that, is now even the right time to invest? How will the macro backdrop affect all these technologies and just the state of the world in general? But when I thought about the more and more, me and Jonas, our hedge fund analyst, we spent, I can't remember how many times I saw Jerome Powell over the last 18 months. It seemed like that man controlled the market and everything that's happened. One word he says, markets go up. One word he says, markets go down. But no matter how much of an expert one may be in macroeconomics, it doesn't give you more of an edge in terms of where markets will go. And so then if the edge is not in macro, where is the edge? And it reminded me, many, many years ago, I read something by Naval Ravikant, which was a quote where he said, macroeconomics is a religion that I gave up. That said, microeconomics and game theory are fundamental. And that started making a lot of sense to me. Because while there's so much headwinds from the macro perspective, somehow in the last few years, we've had some of the biggest breakthroughs in technology. Just this year alone, ChatGPT, AI, innovations in space, innovations in metaverse. In fact, when you look at the numbers of VC deal flow, VC funding was down dramatically from the highs in 2021. Yet an individual segment, being generative AI, has hit new highs by multitudes. And so that educates us to say, if the segment is strong enough, the segment is more important than macro. Further out push, when you look at the quarterly venture investments in companies tied to AR, VR, and virtual worlds, it has been horrific. They're down to the tune of maybe 90%. Yet the very founders that will come on stage today, every single one of them raised money this year. Some of them as big as $15 million rounds, $6 million rounds, $2.5 million rounds, $1.5 million rounds. So not only is it true that a segment can be more important than macro, but equally, the right founders can be more important than the segment. Because even when VR was down, our founders kept building, and not a single one went out of business, and all of them kept building and shipping with some of the biggest deliveries yet today. And so I wanted to really think about, how can you codify frontier investing? Because many of you have maybe heard the story, my background story. I've always been really enthused by the future, from like writing dystopian fiction to, me and David building robots when we were kids, and reading, one of the books I gifted him was The Singularity is Near by Ray Kurzweil, right? And so I've always been drawn to the future. We started with the crypto hedge fund. Eventually, we fell down the rabbit hole of the metaverse with AR and VR. But I've really questioned, why stop there? Because ultimately, frontier technologies are one of the only things that seem to be able to outperform what the markets are doing. And so, how do we arrive at a model where our investing becomes mostly macro-agnostic, so that all the things that are happening in this world don't impact us as much, while at the same time become idiosyncratic? And to find this answer, I wanted to go back at the past. What happened over the past few decades? Because it seems that we get so stuck with, our perception of the present. Some of the biggest companies today, Apple, Microsoft, Meta, they define our lives every single day. In a way, the biggest companies in the world at any given time represent the zeitgeist of society. And so I went back into the past and I looked at how do the top 10 companies with market capitalization change every single decade. And for some reason, we have this recency bias where we think the biggest companies are always the same. But the reality is, from 89 to 99, only 2 of the top 10 biggest companies remained in the top 10, which was Exxon and GE. Now, what was the macro impact? You'll see a lot of Japan on the left side. There was a bubble in Japan, so there was some macro impact. But on the other hand, you saw the first new entrant that survived until today, which was Microsoft Technology. From 1999 to 2009, we saw, again, only 3 names remain in the top 10. Imagine you took the list of today, and 7 of the biggest companies that you work with every single day vanish or become so much less relevant. And what was the macroeconomic impact here? The rise of China. In the early 2000s, we saw a dramatic rise in the economy of China, the GDP, and so we saw 2 companies, China Mobile and China Construction, make the top 10. The first new entrant here, that's still alive today, is Apple. Now, from 2009 to today, we see a dramatic shift. Today, 70% of all the companies in the top 10 are technology companies that you use every single day, that you probably have an iPhone in your phone, in your pocket. You're probably using, maybe Microsoft Teams. You surely have some Meta account, whether it's a WhatsApp account, an Instagram account, a Facebook account, you name it. And it defines our lives every single day. And again, from this 13-year period, only 2 companies remained in the top 10, being Apple and Microsoft. The other 8, out. And so then what's really fascinating is if you take it from 89 until today, 50% of the companies in the top 10 today didn't even exist back then. They were founded in the last 30 years. And so then there's really 2 questions that emerge. First of all, what impact did macro really have in this time frame from 1989 until today? And then secondly, how come that companies don't last that long? Why is it that we have this rotation that almost every decade, every 20 years, every 30 years, there's a new regime, there's new companies in charge? And so to tackle the first one first, a lot has happened. With the fall of the Berlin Wall, with the Soviet Union collapse, we had the European Union form. We had the dot-com bubble. We had the Gulf Wars. We had, what else is up there? Iraq War, Afghanistan, 9/11, the 2008 financial crisis. It's been a pretty intense 40 years from a macro perspective. Yet, did any of that at any point in time affect the direction of Apple, the direction of Meta, the direction of Google? There's no connection between what happens in the world and the course and path of technology. Because ultimately, technology progresses on its own timeline, completely disconnected from the macro events around the world. That's the storyline, but human progress is independent. Secondly, macro headwinds can surely cause collateral damage, right? I'm not naive. Ultimately, a poorly run business with too much debt, mismanaged, they will get caught. They'll go bankrupt. It happens every single time. Just look at crypto. Crypto's gone through so many cycles of winters and summers, and every single winter, the over-leveraged, the fraudulent, go out of business. There was no shortage of bankruptcies last year. However, companies like Kraken, companies like Coinbase, they keep building. And ultimately, their trajectory is not even affected by the slightest by what is happening in macro or what is happening in the smaller cycles. And third and finally, macro, of course, has its use cases. When you look at these comparisons decade by decade, there were some impacts like Japan and China. But it's really more indicative of the geography than whether or not a technology is valid or not. Because macro itself will not, just the level of the interest rates will not determine whether or not we have VR. The level of interest rates will not determine whether or not AI is going to make a difference. Those technologies are a foregone conclusion one way or the other. Now, the second question is, why is it these companies don't last that long? Or why can't they stay in charge? The ultimate reality is that innovation is an S-curve. And what that means is that you have this tremendous growth over a short period of time, but eventually, nothing can go up forever. There are diminishing returns when a company has already dominated its entire market. When you already have half the world being your customers, unless you create more humans or you start onboarding, I think that was a joke in Silicon Valley, fridges, then you can have more users, right? But ultimately, there are diminishing returns unless you change your business model. And why would you do that? Because ultimately, innovation comes with financial risk. It comes with reputational risk. The bigger the company, the more comfortable they are. Why would I take the risk of betting on crypto? Why would I take the risk of betting on the metaverse when we are already dominating it? Because ultimately, those executives, especially once the founders retire, they have very little to gain from taking those risks. And finally, to make growth, ultimately, you have to innovate. So the funny thing is, Jeff Bezos himself acknowledged this. He's acknowledged this over the years. Jeff is somebody that really thinks in long terms. At some point, he built this millennium clock somewhere in a mountain because he believes that over a long period of time, essentially nothing matters. And he's told, I think on 3 different occasions, to the public and to his team, that Amazon will one day be bankrupt. Amazon will not exist. And he told this to his staff in 2018, where he said, I predict that one day Amazon will fail. Amazon is not too big to fail. In fact, I predict one day Amazon will fail. Amazon will go bankrupt. If you look at large companies, their lifespan tends to be 30 plus years, not 100 plus years. And so there's 3 core beliefs that really come out of that, which is that one, as long as there's human progress, there are opportunities to grow. So unless you doubt that we're not going to progress as a species anymore, you probably shouldn't bet on, on progress, right? But I think as long as there's some human ingenuity that pushes forward, that tries to make things better, there will always be opportunities in the market. Secondly, every crisis has means to reduce that crisis or to even resolve it. Bet on that resolution. We saw this, for example, during COVID, during the pandemic, right? It was a horrific situation for the entire world, yet there were multiple companies like Zoom, for example, that provided a solution to the problem, and there was opportunity created. Same thing, virtual events started having a way more traction during this time because, again, they solved the problem. Every problem has a solution. It's not that we are experiencing, a net negative opportunity. It's not that the economy is shrinking, rather, but it's a redistribution of resources. And third, the human desire for efficiency will always supersede reactionary, corrupt, or also just purely traditional regulators. There will always be regulators pushing back, whether that's crypto, whether that's the usage of AI, whether that's online privacy, whether that's cybersecurity. There's been many, many industries where regulators push back, but ultimately, I'm sure they were afraid that cars would kill more people than horses. We don't ride horses anymore, right? Planes were crashing. We're still flying planes, right? I'm sure there was a lot of people worried about, the radio frequency from having a cell phone in your pocket, right? We're using cell phones today. Everything always comes with a certain pushback, and that's something we have to grow through. So if the common denominator of a segment superseding macro is, timing this S-curve correctly, how do we do that? Because the challenging part is that innovations, they don't grow linearly. If it was just up and to the right, this S-curve would be done really quickly, and everybody would do it. The problem, though, is that this S-curve actually grows in microcycles, which means there's always cycles where there's a breakthrough, a new innovation happens. Take ChatGPT. And then everybody throws money in it. There's a lot of funding. That funding then unlocks new ideas, acceleration, disruption. Same thing happened in 2020 with DeFi. A new breakthrough, a lot of money was thrown at it, more acceleration, but at some point, no matter how much money you throw at it, there is a bottleneck. One or two things are going to happen. Either there's a bottleneck, or two, there's going to be regulators that say, hey, we're getting word about AI. Hey, we don't want a full financial system that challenges the banking system. Hey, once we all live in virtual reality, what if a crime happens in virtual reality? Every single microcycle has its own pauses. But ultimately, you work through those bottlenecks, a new breakthrough happens, and you start all over again. And so actually, the S-curve looks something like this. Where we go through these smaller cycles that are ever expanding, we go from the innovative phase, the early adopter phase, the early majority, the late majority, the laggards, and then the super late ones. Ultimately, everybody had Facebook, right? Like, when I first started, it was all the college kids, high school kids. And over time, whole families on there, right? So it's always a transition. And what's interesting is that these graphs are actually really, really similar to a lot of technologies that are trading. So for example, if you look at the Bitcoin graph, it looks exactly like that. We go through these cycles, 4-year cycles. 2 years good, 1 year bad, 1 year apathy. During the apathy, somebody comes up with something. New breakthrough, new idea. 1 year, it's DeFi. 1 year, it's metaverse. 1 year, it's NFTs. 1 year, it's scalability. But every time, it unlocks a new realm. Same thing, back when I read Ray Kurzweil's work in The Age of Spiritual Machines, it was one of the worst things to read in the bear market in 2018, 2019, where he talked about the 1987 AI winter. I was like, what? There was an AI winter already in 1987? And my mind was just racing thinking, what if I'm in the crypto winter of 2018 and somebody will write a book in 2050 about the crypto winter of 2018 and I've got another 20 years of this ahead of myself, right? Where it can keep going and going. But ultimately underlying, AI still grew. And so it's gone through cycles of an AI winter in 1980, an AI winter in 1993. And now we've got this new push. But what most of the people deep in AI say, I had to talk with somebody just 2 days ago, they're expecting another AI winter. And we'll talk about how that's probably going to happen in a second. So the ideal time to really bet on these emerging segments is right between the bottleneck and the breakthrough. Because, and not just on the cycle, but then also on the bigger scale, right before we're the place where we have enough critical mass to go from the early adopter stage to the early majority, or even capture the late majority. And so, critical mass, what does it even mean? And I think critical mass can be broken down really into 3 things that are actually measurable. One is venture capital flow. Where's the money going? The second one is, where are the users? What's the traction like? And the third one is the talent flows. Where are the brains going? Where are the smartest developers coming out of all the best universities? What are they excited to start building? Are they building the next social network? Are they building VR? Are they getting into AI? Because wherever the brains go, the next startups will emerge from. Wherever the money goes, the next opportunities can come from. Wherever the users are, people actually care about. And so, I didn't even fully come up with this. In 2020, I read an article by Adi Lezarin and Chris Dixon from A16Z, where they traced the last 3 cycles of Bitcoin and crypto, where they measured 3 different factors. One was the GitHub repos, how many commits were made to actually change code for crypto projects, developer traction. The second thing they tracked was the initial funding rounds via PitchBook, how many pre-seed rounds got filled. And the third thing they tracked was social media activity. How much are people talking about crypto? And what was fascinating is that every single time, the most meaningful part that they measured was that the baseline kept rising. You will go through booms and busts, but after the next bust, you will have more developers, you'll have more funding, you have more innovation, more users than last time. Which means that you should really trace progress, not by the highs, because they can be misleading. You need to track progress by how low you go, and is how low you went this time higher than the time prior. And so there's a few segments that, in my eyes, are poised for growth in the 2020s, this decade, that I'm paying attention to, which on one hand is gaming, which we'll have a whole session today about, where we're seeing already today there's over 3 billion players in the whole gaming ecosystem. Gaming is becoming more and more synonymous to social media, in fact, where younger generations view it as a way to express themselves, to spend time, to connect. But at 3 billion, naturally, we're not early adopters anymore. At this point, we're migrating from the early majority to late majority. But it is still in this breakout where we're seeing these major innovations like Fortnite, opening up, UGC, where you're going to have entirely new worlds where players become creators. Secondly, you have XR. It's no secret that I'm a big fan of XR. We've backed a lot of XR companies. But XR itself, there's so many, obviously we're in a winter. I showed the graph of how funding is down. Of course, I think it was Business Insider that actually published their headline was, RIP Metaverse must have failed. But the reality is the amount of headsets being sold, the amount of headsets being used is consistently trending up. And the game is also getting more competitive. You had this year, Sony launched the PlayStation VR 2. You have Apple most likely coming out with something in June. You have Google recently, 2, 3, 4 days announced they're going to make a headset along with Samsung. You have Meta released the Quest 3. Every single big tech player is entering the game because they want a part of it, because they realize it is the next phase. If they don't want to die the same death of the S-curve, where they're starting to become stagnant, they need to be part of this. And so XR, in my eyes, is getting right to this breakthrough point when all these new headsets are launching, better form factors, solving all these problems, where the next early adopter phase can actually happen. Another part, of course, is AI. Now, AI has made tons of headlines in the last few weeks, last few months, and it's been capable of incredible things. Our portfolio founders use it. We use it. I use ChatGPT to source LPs. I use ChatGPT to do research. I do use it for everything. Now, the challenge, though, is that we're rather at the top of the microcycle, where the funding's already gone in, acceleration's already happened. And now, whether you see the leaked memos from Google, whether you see what Sam Altman is posting publicly, they're noticing that there's a certain threshold that they're hitting where now we're having diminishing returns. Not to mention the insane amount of compute that AI is currently costing, where some startups we talk to, they have great revenue numbers, but their compute cost is 4x whatever they're making. And so if you're spending $4 in compute, forget about salaries, employees, everything. $4 in compute to make $1, how does it work? VC money. And so once the VC money ends, that is going to enter its next potential AI winter. Or all these amazing tools that we love to use are going to quadruple in price. And then the question is, well, are you still willing to pay, a couple of $100s for all your different AI subscriptions? Another one, of course, is crypto. Crypto is stuck right now in the bottleneck, regulation, and breakthrough phase. To me, they're actually one and the same. Because the biggest bottleneck is regulation. And once regulation is fixed, that can be the thing that actually unlocks the next generation of crypto, because then they can finally actually make money. Because we're in this weird catch-22 where crypto token, they say it's a scam because they are not backed by anything and they don't make any money. Now, God forbid a crypto token makes money, because then you're secure and you go to jail. And so there's no way of winning. And then last but not least, you have space, something that I've also been really enthused about, where the cost of space transportation has been logarithmically dropping year over year since the 80s. And so, of course, Elon has been pushing this really hard where, manned spaceflights coming in, but also the valuations have been skyrocketing quite a bit, no pun intended. And now, they're slowly coming down, and it's probably going to take a little bit longer. Transhumanism all the way in the end, things like life extension, CRISPR, some of you heard about it, where people were pretty much self-experimenting, inject themselves stuff to change their DNA, and a lot of governments didn't like that. So they're also stuck in that regulation threshold, where governments say, hey, we don't want you messing with your DNA. You spread it to the next person, all of a sudden we've got the next virus. And so again, that bottleneck needs to be broken through before that's even ready for investment. And so it's important to identify where are we ready, both on the S-curve and on the microcycle. And so when you look at the funding, for example, when we look at what's top on blockchain funding, of course had a big rally in 2020, 2021. But since then, tapering off more and more and more. So that signifies that we're out of the hype cycle, naturally, and we're getting closer towards what is, again, the more honest pricing. And as I mentioned, the big bottleneck was regulation, which we'll have a full panel on later tonight. Then on VR and AR, same as we showed earlier, again, venture funding is on the decline, which means who's left?
the really committed founders that actually believe in this industry and are, breaking their backs to make it work. Because whoever was an opportunist, whether it's in crypto or XR, they're gone. Not just that, and also the valuations have come down dramatically. I remember when I first launched the Metaverse Fund, we had people send us pitch decks. We're launching an open world, $100 million valuation. Pitch deck, meaning that's the product, the pitch deck, right? And today, we've got full-on live companies with revenue, with enterprise customers, 25 million valuation, 20 million valuation, 30 million valuation, where they're maybe trading, some of them are trading maybe at 10x, 20x to their ARR. And so that's becoming a lot more real. Now, on the flip side, you look at AI, naturally, funding is through the roof. And here's a quote by Sam Altman, who's pretty much, it's not a quote, but it says, he says, the age of China AI models is ending. A GPU crisis could be one reason why. And so there will be a rotation. So I'm a huge fan of AI. We'll probably have an AI fund sometime soon, but not soon. So when the time comes, I believe it makes sense to time these investments when things are the worst, when there's blood in the streets. Because ultimately, for example, crypto is a perfect example for this. You could have, launched a crypto fund at the very peak, and you'd be down dramatically. You launch a crypto, and it's not just launch crypto fund. We have a liquid fund, right? And there's several LPs in the room. Some LPs invested in 2019 or 2020. They're still up. Some LPs invested in 2021 at the very peak. They're down. And so the timing, both on the microcycle and the S-curve, matters a lot. And so kind of breaking these 5 segments down, matching them, stage on the S-curve, gaming, late majority, stage and cycle, breaking through. AI, early majority would be good, but stage and cycle, peak acceleration. XR, approaching early majority and approaching breakthrough, good. Crypto, early adopters, and between bottleneck and breakthrough, gonna take some time. We don't know, but essentially, I would say within 6 to 12 months, regulators have to make a move because we're already now seeing Republican senators push back and say, hey, we're gonna remove you from office. You're gonna be fired if you keep doing this, Gary Gensler. And we'll talk about this with 2 of our top crypto lawyers for both projects and funds. And in space, we've got early adoption, but it's post-acceleration. And then transhumanism, it's just too early. I will probably have a transhumanist fund in 2030 or 2027, not now. And it's between the bottleneck and the breakthrough. And so today is going to be all about this. This is kind of the setup for the rest of the day, because the first session from 10:30 till 1:30 is about the big breakthroughs in VR, right? How is big tech making the bets today to make sure that we go from this early adopters to the early majority? We got Anand from Meta in the house, Pearly HTC, Aaron's not here from Samsung, and the 2 founders that are building the actual infrastructure from being able, with no code, design apps in XR, import into Unity, and be ready to go, to having the most immersive AAA events inside virtual reality that make you think you're in Ready Player One. By the way, both of which, during the breaks, we have demo stations where you can actually try them out, because we're not just going to talk about it. I want you guys to experience what this is actually like. And the second session is going to be all about gaming. I know gaming can sound, it's kids play games. It's not that serious. But the reality is the gaming market is one of the fastest growing markets that has not even been hit by the last recessions. Both in 2000 and 2008, gaming kept growing. It's escapism. In fact, people want more gaming when markets are down. And what's fascinating is that we're seeing this migration almost from social media to gaming, where younger generations, they don't FaceTime each other necessarily. They meet up in lobbies. They play around together, right? And, we'll talk with Anand up next, but if you think about the S-curve and what Meta has been doing, I think it gives you an idea of how they're approaching their own longevity. And in session 3, we'll talk all about crypto. As I mentioned, I think the technology's there. DeFi works. DeFi didn't break. Celsius broke. FTX broke. BlockFi broke. Voyager broke. 3 Arrows committed fraud. It was all centralized players. DeFi, whether it's Uniswap, Aave, Maker, it works. Nothing ever happened. If it was for US regulators, essentially holding founders hostage, both with their time and costing them millions of dollars. I know founders personally that had to quit their crypto startup because they spent $2 million defending themselves against the SEC. And so how can progress happen when that's the environment that you live in? And so we'll dive both into, how crypto regulation can be resolved, and also maybe us going offshore, and of course, I was talking with the legend Mark Yuska himself, how we can rebuild the trust with institutions. Because, look, in 2021, they kicked my doors down. I had a lot of really incredible names cold reach out to me that, how did they even find me? Today it's like, with FTX, we're gonna wait. We're gonna wait and see. Let's let the dust settle. And it feels like dust's been settling for like 9 months. And so there's a lot of work that needs to be done in terms of rebuilding that trust and regaining trust so that crypto can actually become the next financial system.